Hi there, podcast and public radio fans. Heath Drusen here, host and creator of the Extremely American podcast. I'm working on season 3, which is an urgent story about neo-Nazi terrorists and how they helped build a modern white supremacist movement, even from prison. Some of their ideas have even made it to today's White House. It's both a gripping true crime story and a timely warning about threats to our democracy. And this time, my investigative reporting is funded by you. To support the project, please make a tax-deductible contribution at extremelyamerican.org. That's extremelyamerican.org. And thanks.
From the studios of Boise State Public Radio News, I'm Gemma Gaudet. This is Idaho Matters. It's been an extraordinary few weeks for Boise-based Micron. The company just reported record revenue. It continues to see explosive demand for the advanced memory chips powering artificial intelligence, and it has become one of the biggest players in the global AI race. But even with those record results, the stock has experienced some big swings as investors try to figure out just how long this AI boom can actually last. And Micron's story is really a window into the bigger economy right now. Artificial intelligence is changing the way companies invest, the way they hire, even the way they compete. Inflation has come down significantly from its peak, but so many Americans are still feeling the pinch of those higher prices for everything from groceries to insurance. So, as consumers remain cautious, the Fed continues to walk a tightrope between controlling inflation and protecting jobs. And so many people are wondering, well, what AI could mean for their own careers. So, how do we make sense of all of this? Well, that's why we brought in Jason Norris with Ferguson Wellman Capital Management Group. He is back to break all of this down with us. Jason, it's really nice to have you back on the show.
It's great to be back, Gemma.
Okay, so Jason, I just want to start back here at home. You grew up in Boise, very aware of Micron and its, ups and downs over its many years. As I mentioned, Micron just reported another huge earnings quarter. Talk to us about what stood out to you the most.
I think the one thing that really stood out is Micron disclosed that they had 16 long-term purchase agreements from some large customers. And as we know with Micron, it's a very cyclical business, kind of a boom bust when you look back in history. So how long can this last? But disclosing some multi-year agreements with some large customers, that's what investors were looking for. And that's what stood out to us as investors on the most recent quarter.
Jason, I think that's so interesting, right? That boom bust, because we've all seen it. I mean, if you've been in the Treasure Valley in Idaho for a long time, you've seen that with Micron. I mean, I've reported numerous times when they've done major layoffs, right? And now these record earnings. So with that boom bust, I mean, I think a lot of people almost wonder, well, as you said, how long is this actually going to last? I mean, right? Are we going to see them slide again?
So, the phrase "it's different this time" shouldn't be used in investing, but it might be different this time, at least in the short term. The demand for their memory chips, specifically their high bandwidth memory chips, is off the charts, as we know. And there's only really 2 other companies that produce these. So it's a very supply constrained market. And as we know for years, it'll be supply constrained. So we think the cycle has still legs to it, but as we see when we drive by the Micron facility, there's a lot of capacity being built. And so the wild card is in a couple of years, once that's up and running, what happens to revenues and prices at that time. And that's what also is causing the volatility in the stock over the last couple of weeks.
So let's dig into a little bit more about these memory chips, because it seems to me, as you said, there's only 2 other companies that do this. So Micron has become one of the biggest beneficiaries of this AI boom. A lot of people, Jason, don't follow semiconductors every single day. So tell us, why are memory chips suddenly so important?
So historically, Micron made primarily DRAM, memory chips for your cell phone, your computer,
Hmm.
your laptop. And with AI, the processing demands are so great, is that there needed to be faster memory to make AI less costly and more efficient. And Micron has these chips that even make it more important for their customers so they can deliver when you're going on Google Gemini and you want to plan an itinerary for a vacation, that those results come back quicker than they would normally. So that's the key where we are now. They are different. It's a different technology, and it's a highly demanded technology by the likes of Google or Microsoft and Facebook.
Mm. So Micron has talked about demand for its high bandwidth memory chips. And I think, Jason, as you said, right, they're effectively saying that there's this demand well into the future, right, with these contracts that they've talked about. So, in your opinion, does that suggest that this AI build out, I mean, still has a long runway, if that makes sense?
So we do. I mean, we think there's estimated to be about $700 billion spent in the US on AI this year and over $1 trillion next year. So what we're watching is, at least in the near term, there's a lot of momentum and the large companies are spending this money. And what we need to handicap now is what happens in 2029 and 2030. Does
Mm.
demand slow down? Does that rate of growth slow? And that's the big wild card. But we believe that, if you're looking at a baseball game, we're not in the first inning, but we're not in the seventh. We may be closer like to the third or fourth inning of this spending cycle. But for investors in the stock market, investors look to the future and try to discount the future. So when demand slows, stocks will already reflect that. So that's why this volatility is here as well.
So can we dig into the volatility a little bit more? Because as you said, I mean, Micron's had really strong results, right? I mean, we've seen some dramatic swings though in Micron's stock price just over the past few weeks. So explain, to the average person, why then can a company report? I mean, we're not talking just great news, we're talking like record breaking revenue, right? And still, there's such volatility within their stock prices.
So, the most recent quarter is a great example. Is the expectations for the earnings were very strong for investors. So Micron had to deliver a quarter like that, or a lot of investors would have been disappointed. So there's that push and pull with that as well. And just back to your question of how long does this last? Investors are still struggling with that. And there's a lot of investors, let's say of my age, that experienced the boom and bust of 1999, 2000, and don't want to
Hmm.
get fooled twice. So I think there's a lot of cautious about, are we in a bubble? Are we close to a bubble? And then with the likes of Micron, it's adding a lot of volatility to the name. And so that's impacting a lot of this. But we believe that owning this stock, you have to have the stomach for the volatility, but we still think it's positioned well, at least for the next couple of years.
So, Jason, is this simply the reality of investing in emerging technologies? I mean, because that's what AI is, right? I mean, it's been here for a while, but it's still a growing, emerging technology. And I ask this question because it seems like, what happens when you're investing in these technologies is that you have this expectation that you want this to move even faster than the company is actually performing. Is that an accurate kind of take on this?
That is a great take on it. And this doesn't reflect the Micron specifically, but I believe Bill Gates came up with the phrase that investors overweight technology changes in the near term and underestimate them in the long term. And so
Mm.
investors are like the AI spend. They believe it's going to do a lot of things, but will companies use it as quickly as expected? And especially emerging technologies and changing markets, there's a lot of expectations of a lot of growth. And if those expectations just fall just by a little bit, you can see a lot of volatility, and especially downside volatility in a lot of the stocks. So, and then also for a short period of times in emerging technology spaces, Stocks can act a lot differently than their fundamental results because it's all about expectations of future growth. So there's a lot going on here in this space, and that's what makes it exciting. But if you're watching it on a day-to-day basis, it can be, it's not that fun.
Might give you a little bit of a stomach ache every once in a while if you're watching it every single day. Yeah. Well, let's look beyond Micron, can we? And I'm curious to know if you believe we're still let's stick with that baseball analogy you used. Are we still in the early innings of artificial intelligence? And I'm talking from an investment standpoint, right? Or
Yes.
is the market starting to price in, too much optimism? I mean, personally, and I'm no, financial guru. I just kind of look at my own kids, right, who are teenagers, and how AI is just such a part of them. It's a part of. I mean, to me, AI is not going anywhere. It is not going away, like it or not, right? So then you ask yourself, well, okay, from an investment standpoint, what does that mean?
Exactly. And in the key for AI, it will be transformative, and the use case for every individual and every business will be different. But when you're looking at these, major shifts in technology, the key issue is demand and pricing. Right now, if you have to, AI is pretty expensive on a relative basis if you want a monthly subscription for Gemini
Mm-hmm.
or Chat GPT. So if prices start going down, how does that impact the stocks? It can be good, it can be bad. So that uncertainty, but structurally, AI is, it's going to be just like the internet at worst. It'll transform how businesses do business. Companies looking at cost structure or growth opportunities, and then just consumers, planning trips or remodeling their home. The use cases are infinite, but also it comes down to what price do people want to pay to use that technology.
Mm. So let's shift to the broader economy if we can for a little bit, because as I mentioned, Jason, inflation has come down from where it was a couple of years ago. However, a lot of people would probably tell you it certainly doesn't feel like that because prices aren't back to, and I'm using air quotes here, normal, right? So why is that? Or frankly, are these prices the new normal?
The inflation spike we saw earlier in the year, driven by oil and gas prices. While those prices are coming down, a lot of that impact has filtered into other areas of the market, and cost structures have gone up. The tariff impact is still real, even though most of the tariffs have rolled off. There are still tariffs out there that have hurt the input costs of a lot of products. So, our sense is that the inflation number right now, it's about 4%. Broadly should come down throughout the year, but we would be surprised if it gets below 3. And while the other aspect and the positive aspect of inflation is the U.S. economy is actually doing pretty well. And so inflation is a factor of, pricing as well as growth. And we're seeing some of the
Hmm.
growth impact, the AI building out capital expenditures, demand for product is affecting other areas of the market. And that's also going to put a upward pressure on inflation. So that's kind of the good and the bad about it is with a growing
Hmm.
economy, there are inflationary pressures. So we don't think we see 2% in the near future for the inflation rate.
Well, so because the Federal Reserve, I mean, they're trying to do this balancing to act, right? To keep inflation under control, but they also have to protect the job market. Where do you think they stand right now with that?
So our view is, the Federal Reserve is right in the middle. When you look at the inflation rate, while it's high, the rate of growth is slowing. So we don't believe that they need to raise rates to fight inflation at this time. But the jobs market is still healthy. The unemployment rate still is relatively low. Job growth, while last year in 2025, we saw a pause in job growth, over the last several
Hmm.
months, we've seen a pickup again in net hirings across the US economy. So our belief is the Federal Reserve, when looking at maximum employment and price stability, while we're not perfect in both of those, they really don't need to move either direction at this time to either raise rates or lower rates. And we don't expect they do, at least through the end of the year.
And with all that said, Jason, I mean, people are still paying more, right? I mean, groceries are higher, insurance is higher, frankly, everyday necessities. You're spending more money. So, how much can we say, oh, that's just inflation, prices will come back down at some point? Or do we have to prepare ourselves for the fact that prices may not come down?
We could see a step function up in the price level. And we saw this unfortunately back in 2023 and 2024,
Hmm.
after we saw the inflation of 2022. And then we didn't see a decline in prices after that step function up. We just set a new normal at the level of prices across the economy. So that may be what's occurring, and there are a lot of other issues affecting the market. But what could happen, and back to your point, is we may see prices just remain sticky higher, and hopefully that rate of growth slows. But it's hard to see a level of prices, especially for gas, insurance, and other items that people
Hmm.
buy every day, come down meaningfully, at least in the near term.
I want to talk about consumer confidence if we can, because it seems that it's been fairly subdued for quite some time. How much does consumer sentiment actually matter to the economy?
And actually, looking back at history, back into the 70s, it matters very little, unfortunately, because consumers, you can feel one way when someone calls you up and asks you a survey, how do you feel today, good or bad? But depending on your situation, when you spend money, does that impact, are you going to spend money? And we've seen, if you compare consumer confidence with, let's say, retail sales, there's really no relationship. If consumers are feeling good or bad, retail sales continue to grow. The consumer likes to spend money if
Hmm.
they're employed. The biggest factor in consumer confidence that we've seen is the price of gas. When gas prices go up and there's inflationary pressures, people feel worse. When those come down, people usually feel better. And that's a very general statement, but um, it makes sense to us because that's the price everyone sees every day. And the majority of consumers purchase gas, at least, we'll say once a week. So that's the one item they feel every day, and but that doesn't mean they might not go out or shop or take a vacation this year because they're feeling upset because gas is higher.
Another topic people ask about constantly, Jason, is artificial intelligence and jobs. And it seems like, there is excitement somewhat about, technology. There's also this concern that AI is going to replace jobs, is going to replace workers. And I read a quote the other day that said, it's not that AI will replace your job. AI will replace a job of a person who's not willing to evolve and learn about AI. And I say that because it takes me back to, even, I'm sure, like when the internet was starting, right? It's this idea of, if you remain a dinosaur, you are going to go extinct. So I'm curious about what you're watching in today's labor market in regards to this this fear, right? And it feels like a growing fear that AI will replace people.
Yeah, it is there is that fear out there. And, we hear from clients who, my grandson can't get a job. He just graduated from college or got laid off. And we hear a lot of those anecdotes, but the data we're looking at to get a sense on how it's impacting the jobs market is the unemployment rate for recent college graduates. And that's an area, those entry level jobs, that theoretically companies will hold off from hiring if they're using AI. And that unemployment rate has been pretty steady over the last 12 to 15 months. And the other area we're watching is software development jobs. You hear all the announcements from tech companies that they're using AI to write software, to write code.
Hmm.
We're actually seeing more demand for software engineers and software developers because AI can't do it all by itself in a vacuum. You still need those developers and that skill to help the AI and monitor it. So to your point, jobs are going to change. My favorite anecdote is when you look back 25 years ago, on every corner there was a Blockbuster Video. Now there's
Yeah.
none, and that was Netflix. So things happen, things change, and people need to adapt and adjust. And for those who lose jobs, it will be unfortunate. But when you look at the breadth and the growth of the economy in general, historically, these cycles, the internet, the automobile, all of that have led to a higher standard of living in general.
So, Jason, finally, last question for you. For someone who's trying to tune out the daily headlines, right? Because it can frankly just be a lot. And they simply just want to try to build some long-term financial security, right? What is the most important perspective that you would want to leave folks like that with today?
The most important perspective when you're looking at long-term growth, long-term savings, one is diversification. So owning a balance of stocks and bonds. So if the market drops meaningfully, those bonds will act as a shock absorber. And knowing your time horizon, and if your time horizon is long, then don't monitor your account on a daily basis because it'll make you make decisions that maybe you shouldn't. Longer term, the markets grow. Usually, historically, around 10% the stock market grows, but there are periods of time when it doesn't. And just understanding if you have a long-term time horizon, invest, put it away, lose your login number to your investment account and check it in 10 years. Focusing on that long-term objective will help you not make bad decisions relative to your investments.
Yeah, or those emotional decisions, right? If you're checking every day.
Exactly.
Yeah. Well, Jason, as always, thank you so much for your expertise. Appreciate you spending time with us today. We've been talking with Jason Norris with Ferguson Wellman Capital Management, talking about Micron's incredible earnings, as well as really the state of the economy, the state of inflation going on right now, as well as where we are with artificial intelligence. And that'll do it for this episode of Idaho Matters. Make sure you check out our podcast feed because you can find more episodes of topics that might be interesting to you. And for more local news and headlines, make sure you subscribe to the Connector podcast. If you learned something from this episode today, share it with someone else who needs to know about it.
Love Boise State Public Radio podcasts? They are free to enjoy, but not free to produce. If you can give, your support helps keep shows like Idaho Matters and Scandalize available to everyone. Donate now at boisestatepublicradio.org.